Hello, good morning, traders and investors. Welcome back to our morning trading recommendations channel. Before we delve in, remember that everything we discuss here is for educational purpose only. Make sure to do your own research and consult a financial expert before making any financial decisions. Starting off with the commodities market updates, overnight the soybean oil July month rise slightly higher 0.03 to 43.66. The daily market will resume trading today from the holidays over in Malaysia, but the palm oil futures follow a downside trend in line in the Chicago soy oil on Monday, as the traders exercise cautious ahead of the data released by the Malaysia Palm Oil Board. And the CPO contract August month dipped 56 point or 1.41%, closed lower at 3919. The country's palm oil reserve slightly increased to the 3 months peak in May, as robust export will counterbalance by the resurgence in the production, as reported by the industry regulators on the Monday. Okay, now we're looking closer to the charts. Following the slight upwards movement in the seaboard soil, the FCPO could likely to trade within a narrow range. Currently, the CPO price is experiencing a limited movement due to the lack of market directions. The recent hourly charts indicates the downside bias consolidations, with the SMA indicator also continues to point downwards as the primary strategy. We recommend to sell on the rebound. Traders should remain cautious of any changes in the market sentiment. Resistance is expected between 3960-65, while the support is anticipated between 3900 to 3905. So for morning trading recommendations on the FCPO markets, our plans will be short positions may be open below 3940 with the target at 3903 to 3887 and a stop loss at 3970. Alternatively, long positions may be open above 3940 with the target at 3961 to 75 and a stop loss at 3910. Now next we are moving our focus to the index market. Overnight, the Dow Jones up by 69 points to 38868. On Monday, the S&P 500 and Nasdaq managed to secure the record closing high, and albeit with the investor exercising cautious ahead of several key events this week, including the consumer price report, a Federal Reserve policy announcement, and Apple developers conference. The Malaysia benchmark FBM-KLCI index ended in the negative territories on yesterday as the investors shift their focus to the small cap stock. The futures contract June month FKLI dropped 7 points to close lower at 1611.5. Attention is also shifted to the US inflation figure for May, which will be released on the same day as the conclusions of Federal Open Market Committee's meeting on the June 12th. Additionally, markets focus has turned to broader political concerns in the Eurozone following the snap elections called in France. Following the slight bullish performance in the US markets, FKI is likely to trade within a narrow range. The FKI opens higher just now, tracking the rise on the US markets overnight. The charts form a lower high, when it faced a resistance at 1622 level, which is the recent resistance, with the recent price movement suggesting a contractions into a consolidation range. Indicators also pointed to the sideways consolidations. We maintain our view that the index will continue to downwards consolidations upon reaching the resistance range around 1618 and 1619, with the support range seen at 1610 to 1611. So on morning recommendations on the FKI markets, it will be short position maybe open below 1615 with target at 1611 to 07 and a stop loss at 1620. Alternatively, long positions will be open above 1615 with the target at 1618 to 23 and the stop loss at 1610. And that is our view on the morning sessions. As we wrap up today's market analysis, remember the market is ever changing and successful trading requires sizing opportunity and managing risk. Stay adaptable to market shift, protect your capital, and trade wisely. Wishing you all safe and successful trading ahead. See you in the next update and happy trading.